Hey traders, Raghee here. Welcome to our pre-market show. Great to have you. Welcome to my office. Good to see you all. Good morning. Good morning. Good to see you all. So if you have any questions, feel free to type them on in. Welcome to you all on Facebook and YouTube and wherever else. I'm trying to think where else we're broadcasting to. All right. So let's get to it. We got a question here about, Bill, yesterday I used the expression double green, as in the SPY went double green. All right, the S&P. I'm not familiar with that term. Could you explain? Yeah, absolutely. Steph said it's Spaghetti Day. Wow, really? There's such a thing? I guess why not, right? Why not be Spaghetti Day? Okay, very cool. Amazon. All right, let's start off with this double green conversation. All right, so we're going to jump over to the charts and start taking a look at what it is to be double green, what that reference is to. So that reference is to a number of moving averages, a number of exponential moving averages. This is the TradeStation platform, by the way. And this is a handy dandy little tool that we use in the futures room to talk about point values and exchange, the minimal, the margin requirement, maintenance margins. When I'm looking for a minimal amount of volume and open interest, it's some very cool things on this cool tool from TradeStation. So that's what's sitting on the right side there. Free tool. Anyway, so what's double green? So you'll notice the two labels in the upper left-hand corner. And what those are, as you can see, are green. So hence the double green. 8, 13, 21 means the 8, 13, and 21 exponential moving average. Wave denotes my 34 EMA wave, a 34-period exponential moving average on the high, the close, and the low. So when they're structured in a very specific way, suggesting strength, they're green. When they're, let me show you another look here. I believe Intel's double red. And you have the structure of those moving averages indicating weakness. I think Cisco may or may not be any longer. It was for a long time. Now it's gone into chop. But that's what it is. It's the structure of those moving averages. Thanks for the question, Bill. All right. So happy Spaghetti Day. That just cracks me up. Good to see you all. Welcome, welcome. All right. So a couple questions about Amazon and crude. Sure, we can take a quick peek at that. Harry asked, am I in Texas? Not that often. Not that often. I was a lot more often in 2017 and 18. Kind of like my second home. My sister lives out there. Of course, Simpler is headquartered out in Texas, but I'm in Florida HQ, as I like to call it. All right, so question about Amazon. Sure. So when we talk about Amazon, let's jump on over to this layout here on Thinkorswim. And what I'm going to do is I'm going to type in the AMZN, but I'm also going to add the XLY to the study. All right. Okay. So what we have here is a comparison of the daily time frame of Amazon and the XLY ETF that Amazon is roughly 25% of. So what you can see here is that they're both yellow. And how do you, let me show you what I mean by that. I'll give you guys a little bit of insight into this tool that we use in the rooms. So here you have that yellow there and that yellow there. That's what's syncing up with this. Okay. Now, what that tells you is this market is not trending. Now, the trend that was is clearly up. I mean, we have a nice uptrend, and that means that when we move into chop, as we have, so we have a choppy market now, and when we're in chop, as we are right now, all of this, what do you do with that? When the market's in chop, I'm going to keep the bias of the trend that was, or as I like to say, respect the trend that was, and I'll focus on oversold buys. This is not that dissimilar, by the way, to a stock that I received a lot of emails about, and actually probably was a #1 text question that I got, which was, Rog, what's going on with Tesla? Well, same idea. So Tesla, you can compare to the QQQ. You can compare now to the SPY. Those S&P folks have a large task on their hands on December 2/1 when this gets added to the S&P. I was curious as to whether Tesla really would, because so much of their profit are those credits that they receive, but that's a whole other question. This is a fanboy stock, and I don't mean that in any derogatory way. What I mean is when people are passionate about a stock, most especially about their CEO, you're going to see a very interesting dynamic. How many people have been shorting Tesla? Are they out of their minds? You think they would have learned that during the Steve Jobs years at Apple. Don't short, don't fade, don't bet against a fanboy, or as I even call it sometimes, a cult stock. Again, that's no derogatory knock against Tesla. Don't do it. It doesn't make sense historically to bet against these sort of that sort of CEO leadership. It just doesn't seem to work out, even when logically, I hear all these logical things about accounting, and I've read them that make a lot of sense. It doesn't matter. Go figure. This is one of those situations where if you just follow the 140-year-old wisdom of Charles Dow, and what would Dow have said? Well, Rog, if you were here, Rog and group, what was the trend that was? Well, it was up, Charles. And now what is the trend? Well, it's sideways, Charles. He goes, respect the trend that was, focus on oversold buys. Am I in any way surprised that we're moving higher? Technically, no. I think if some trader said, look, Rog, if we think that there's an sip of coffee. If we think there is an inevitability to Tesla being added to the S&P 500, yeah, buy it. So not now, but again, it's thinking ahead. But remember that the trend that was is still going to be the wind, if you will, in the sails of the stock. So not that different when you talk about AMZN and TSLA. All right. So I hope that makes sense. All right. So next up is the logistics of the rollout. Oh gosh, Paul, you're talking to the wrong girl. As far as the logistics go, all I care is where is the trade. So as far as the logistics go, or what companies are going to benefit from it, that's something that's way too soon for me to even make a play on. Clearly, I don't want to be short healthcare because technically it doesn't make any sense. And with what we're expecting with the vaccine, it doesn't make any sense. But I am going to be a little bit more selective about where I'm buying. And it's not mRNA. It's not PFE. It's the likes of UNH. It's the likes of DHR. It's possibly AbbVie sometime here in the future. It's going to be TMO, these relative outperformers that within the healthcare sector, you could even jump into IBB and look at some of the stocks in there. But that's not something that, again, unless you're talking specifically about the companies that you think might benefit, I'm not going to bet on a horse. I'd rather bet on the overall tide, or I'd rather bet on the outperforming horses that have nothing to do with the vaccine narrative. All right, when I say trail stops, how do I do this? Well, the how is probably a little bit beyond the scope of what I can dive into in the show. But when I say trail stops, what am I doing? What I'm doing is it's a second stage trade management process. What do I mean by that second stage? Well, the first stage is taking your first profit target and moving a stop to break even. What's break even? Pretty much where you got in. Maybe just below if it's a buy, just above if it's a short. So the first job is always pay yourself, move the stop to break even. But the second stage, the second step, then gives us the chance to start trailing a stop, which is to say now we're just protecting some of the unrealized profit of the trade. So, I've been doing that pretty consistently within TMO. This applies to intraday charts as well, which is to say, once the first target's hit, I don't want to get out flat. I want to scale out, right? Flat meaning no position. So I want to scale out whatever my number of units are, contracts of options, number of stocks, whatever it is. I'll get out of a half or maybe a third of those lots, of those contracts, of those shares. And then at that point, I can see how high is high and I can place a second target. Once I hit the second target, I'll go into trailing stop mode. One really easy way to trail a stop is to use the first profit target as a trailing stop when you take profit at the second. So that's one way to do it. Another way that I like to personally do it so that you don't smother the trade, because here's one thing I see a lot of traders do. They place their stops at a level of how much they'd like to lose point or dollar wise. Well, realize that means nothing to the markets at large. It might mean something to us, but it doesn't mean anything to the markets. So if you're going to trail a stop in, say, Amazon, do I have TMO? Maybe I have TMO. Here we go. I'm going to trail a stop in TMO. I don't want to be really any closer than about 10 or 12 points, because that's the typical price movement range day to day of Thermo Fisher Scientific. So if I don't respect what this typically moves, how much fuel is typically in the tank day to day, and I place a 4-point stop, I'm setting up a stop really to be hit. And that's okay too. Know that though. Don't be shocked if Thermo Fisher comes and tags a 4-point trailing stop or a 6-point trailing stop, because minimal, it should be 8. Best, it should be about 12 to 14. So that's what I mean about, getting a little bit more nuanced with the historical price movement range. This, if there is, and I'm not really trying to be, no hyperbole, no drama, this is the secret sauce to trading. This is the stuff nobody talks about. And there's a reason for that, because this data has only been around for about 10 or 12 years from a retail standpoint. And most people don't know what to do with it once they see it. And this is data that looks back at 6 months of price action behavior. What is the typical nature of a market? Doesn't matter if it's Forex, a stock, an ETF, futures contract. So much of the decisions we should make about market movement is not an average true range. That's actually, it's fine, but it's not nearly as powerful as a historical range. That's how you trail a stop well, right? So I hope that helps. Okay, what resource do I use to look up the top 10 holdings of an ETF? Andreas, you can look at ETF DB. You can look at, I think Yahoo Finance probably has it. A lot, Zacks I think has it. I like ETF DB. That's my preference. Sector SPDR has that information too. I'd say Sector SPDR and ETF DB are my favorite 2 sites when I'm doing my ETF sector related research. Okay. All right. So again, some of the questions are like, how do you use this and how do you use that? That's not what we have time for in the 20 minutes. I mean, if you want to know how I use certain things, I need time. I need some background to give you all. You can join me in either the Simpler Futures, the Sector Secrets Mastery, the Simpler Options Room, and we get into a lot more detail there, but it's sort of outside the scope of what I can walk y'all through in our morning show. And speaking of our morning show, let's talk about the calendar here. Let's for a minute just take a break from the questions and take a look at the calendar. So what I want to look at is what we have, not just what we have coming up on Wednesday, but what do we have late Tuesday? Nothing really, unless you're into trading the Aussie dollar, which I haven't been as much. Then we can look at what we have coming up today, Wednesday. We have the 8:30 CPI. We have some Australian data again this evening. So after the market closes, if I'm looking at the 6A futures or the Aussie US Forex, that's something I'll look at 7:30 tonight Eastern. But today, other than crude oil inventories, where I'll look at a first come, first serve fade of that data, so purely a day trade for the most part, pretty quiet on the scheduled economic data part of the calendar. Look out ahead. Make sure you always look out ahead at what the market's going to be factoring in to, well, if we have Powell coming up tomorrow, that's going to matter. A lot of times people look at what's coming up in a very truncated amount of time. Look at what happened before the market opened and look at what the market's looking ahead to. Not a whole heck of a lot going into Thursday, not a whole heck of a lot really going into Friday. A little bit of FOMC member speak, but Kaplan's not an influential member in the likes of, say, a Williams or a Clarida or, of course, Powell. But we have G20 coming up at the end of the week. I don't think that's going to be a major market mover. So pretty quiet. And then we go into the holiday weekend. So keep that in mind as well. So that's what we have. Pretty quiet, and just make sure you take a quick pit stop over at tradingeconomics.com, because a lot of times the Federal Reserve members and different central bank speeches are not going to be necessarily listed on Forex Factory for whatever reason, but you'll notice they will be on Trading Economics. And Wednesday, what do we have? Scroll down. Let's see, really a whole lot of nothing. Fed admin, okay, that could be interesting. Look at that at 10 a.m. It was not listed on Forex Factory. So as we complete the clearing range today, meaning from 9:30 to 10, the opening or clearing range, the first 30 minutes after the bell rings, we've got Fed Evans at 10 a.m. That could be an interesting, that could be an interesting thing to keep an eye on, especially if you're a day trader in the morning like I am. All right, so that could affect the volatility during that all-important range-setting period between 9:30 and 10. Okay, so let's do this. I'm going to walk through a little bit of whether or not we have gap psychology today. And let's jump on over here. And as far as the S&P goes, you'll notice that, again, are we trading above or below the close? Are we trading above or below? This is actually looking like an inside day right now, so certainly no gap psychology. The NASDAQ, again, NAS is minorly, barely a gap down. It's got to open below yesterday's low and yesterday's close, so maybe barely. I'd keep an eye on that. That could be a very minor gap down. Dow, nope, that's going to be opening up within yesterday's range. And finally, the Russell. I haven't traded the Russell in a while. And those of you in the simpler futures room know yesterday we actually played the Russell. I haven't played the Russell in a while. We bought some IWM calls. And, just bear with me here. We bought some IWM calls. And actually, I usually hate the Russell. But again, I don't like the Russell because it's not a high concentration weighted index. And it's not as tethered to the narrative of the Dow, NASDAQ, and S&P. It's kind of its own thing. So be careful. A lot of people love it. A lot of people don't love it. I find my results with the Russell are a little mixed. But the Russell is going to be very close to a gap up open. So NAS and Russell are very minorly teetering on some gap psychology. The Russell was the best trade I had yesterday. And I didn't even think that was going to be the case. I complained about even doing it the entire time, but sometimes you just take the trade because it's set up. If you're playing the Russell, that could also be the IWM, gang. We have bullish bias here. Russell's double green on the IWM, but is it double green on the RTY, which is more important to me? As the more 24-hour look, it sure is. So the S&P now has some company in terms of bullish structure. All right. You'll notice that the NAS, it's not quite there. And the Dow, take a peek, double green. So 3 out of our 4 broader averages have gone double green. I've got a lot of questions about why I'm as bullish as I am on the market. Gang, it's not about whether or not I believe the narrative is true. I get a lot of folks telling me, well, Rog, don't you know this is not necessarily true and this is going to fall apart? And yeah, sure, I've been doing this for 32 years. You start to see patterns, but here's the most important pattern, gang. It doesn't matter what's true. It only matters what the market believes, okay? And we know that that's a squiggly little line there. You guys remember that it's one of my favorite movies, brilliant screenplay written by Aaron Sorkin, who's a genius, and A Few Good Men. And I don't know if you remember that. I've watched that movie many, many times. There's a scene where Tom Cruise's character is talking to Demi Moore's character, and she's telling him, well, you can do this and you can do this. And that was that scene where he's teasing her about missing the day they taught law in law school. And he yells at her finally, and he says, it doesn't matter what I believe. It only matters what I can prove. Well, I kind of feel like that when I tell you, well, it doesn't matter what is true. It only matters what the market believes, right? And right now, the market believes we're going to get stimulus. The market believes there's optimism on the vaccine front. So yes, I could sit here and we could speculate and have a cocktail-like conversation, but that's better for 5 p.m., not 9:30 a.m. about all the factors that are laying some seeds of doubt around the vaccine, or all the reasons why this move shouldn't be happening, and et cetera, macroeconomically, doesn't matter, right? We're getting the structure that is proving that price action continues to move higher. So go with the flow. We're traders, right? So, all that argument stuff works really well on TV, which is why I don't watch it. Right now, I've got my Netflix on, and I'm watching the series called The Coach's Playbook. So far, it's really, really good. I'm about halfway through the Doc Rivers episodes. So check that out. You're not going to get anything of benefit other than late breaking news or something that might move the psychology of the market on television. You're not going to get advice that's going to help you manage these markets, sadly. My thoughts on Bitcoin: I am exceedingly bullish, but not at these highs, right? If you liked Bitcoin now, well, to me, this isn't to anybody in particular, but it always cracks me up. I don't like Bitcoin anymore at 16,000 than I liked it when I scooped some up at 4,200. My cost basis before that on Bitcoin was $430. So I've been a long-term holder of Bitcoin since 2016, going into the election 2016. So yes, I'm a big fan. It's digital forex to me. I'm a huge fan, but not at these highs, right? Okay, so let's see. Do I ever trade the 6J? Yeah, not only do I trade it, I keep an eye on it in terms of movement, flows in and out of the yen, indicating whether or not I may want to be bullish the equity markets. But remember here, gang, I've been talking about this for a while in the premium videos and in the videos for simpler and in the rooms. The dollar right now, gang, is weak. It's of the three big positions that I've got. I won't say big. My long bond position is not big, but my long gold and my short dollar position is rather large. I'm still very bullish bonds. I'm bullish gold, and I'm bearish the US dollar. So if the dollar's weak, it's going to make the yen look stronger than it really is, and it's going to actually trigger sort of an incorrect reading of yen strength, reflecting the equity market. So be aware of that, okay? All right, so I've run over a little bit. I try not to, because I know a lot of you are going to be going to your respective rooms, the options room and the futures room, where I'm going to be heading shortly. And let me grab a few more questions, and we'll call it a morning, okay? Are the bullish, bearish wave signal indicator? Oh, the flags? I make those available free to members. Nick, yeah, those are free tools to members. What else do we have here? Nice coffee mug. Thank you. I have a thing about coffee mugs. Yeah, I have way more of them than than any single human really needs. But I love a really nice coffee mug. Yes, I'm kind of obsessed with them. I've got more mugs in my cabinet than glasses. Yeah, Bradley, you've checked out that Coach's Playbook? It's so far, it's fantastic. All right, cool. Well, at least I know I'm watching a good series then. So dollar's going to continue to get crushed. And while it's easy to compartmentalize the conversation about short dollar, long gold, don't hang your hat on that correlation, but it should work. That's not why I have the long gold trade on. I have the long gold trade on because I'm bearish yields. That's the other reason that the bond long works. That's the reason that the gold long works. That's a yield conversation for sure. Let's see. Where do I buy and store Bitcoin? Gosh, Karnan, that's a big conversation, and I would hardly consider myself an expert in Bitcoin, but I've got some in a wallet, and I have my Bitcoin in normal places people would, your Coinbases, etc. I've got a number of accounts. So I have some online. I have some cold storage or wallets or whatever they call them. But Coinbase is usually, I think, reputable. Gemini, those are good exchanges. That's what and again, my knowledge of the coins are probably pretty dated from what I studied back in 2016, 2017. And that's where I did most of my Bitcoin purchases. Please, look, gang, it's very volatile. If you like it now because everyone's talking about it 16,000, please, and I mean this sincerely, ask yourself why at 3,000, 4,000, 5,000, 6,000 you didn't like it. There's a chance we could head down there again. So please don't buy these things at the highs. We have stories of people who did that, mortgaged their homes, sold all their stocks, and bought Bitcoin at 17,000 or 20,000, only to watch it go to what, 3,500? So please don't buy these things at the highs. Heaven forbid anyone on financial media talk about Bitcoin reasonable to scoop up in at 3, 4, 5,000, not at 15, right? Why they give it so much press at a time where it's, tripled, it just, and quadrupled, just frustrates the heck out of me. And people think, well, it's a good thing to buy now. Personally, I don't think so, not at these levels. All right, so let me wrap up here, gang. Yeah, Wednesdays we tend to run a little bit longer, but yes, make sure you have those keys. Yes, yes, on those coins. You're right. You're right. How do I anchor my VWAP? I anchor my VWAP based on time intraday and based on dates end of day. So I don't use a rolling VWAP. Correct. So anchoring, some of the easy anchors, you could use a rolling 10-day and a first of the month. By the way, if you're not already checking them out, and they're free, they're on the YouTube channel for Simpler Trading. A lot of these topics and questions I actually cover in the free videos, so you don't even have to be a member. Check out the free videos. We have a free video nightly from the options group, from the futures group, which I do, and even Fibonacci. So check that channel out, the Simpler Trading YouTube channel. And many of these questions about the VWAPs and some of the labels I cover in the nightly video. It's a free video, runs about 5 minutes, and there's a lot of really good information. Fluff-free zone. I don't do fluff, gang. So check it out. I think a lot of you are going to find a lot of benefit to those videos. So with that, I'm going to go get to work. I know you guys have got to get to work too. So let me get out of the way. Have a great one. I'll see you all in the futures room or the options room or the Sector Secrets Mastery room, wherever you're heading to next. And for everyone else, I'll see you tomorrow morning. Same time, same station. All right. Be good to each other, gang. Leave your questions in the comments section. I'm going to be taking some time later on this week to catch up on those. But again, thank you so much, gang. Talk with you soon.